As you know, I've got bearish counts and I've got bullish counts, and today, this on the NASDAQ here, we can look at this as 1, 2, 3, 4, 5 for 1, and ABC back for 2. So what we can be assured of, be it a bear market corrective rally that we're still in or a bull market, what we can say for sure is that we have wave 1 here and 2 here, and then we'll be looking, we're in wave 3 now, and then we'll have wave 4 and wave 5. So we will be bullish for some time. So that's good news. So based on that, we'll go in and have a look at the stocks, and on Apple here, with Apple here, we're climbing up. So we were going to stay bullish with Apple as long as the 165, which is minor group 2, stays in place. So that stayed in place. The count that I've got to the upside here, it can be counted in different ways. I won't go into that at the moment, but what I can say is that we will be climbing higher. So as you can see here, we can look at from this wave 4 here, which is 1 and 2 and 1 and 2, a little 1, 2, 3, 4, 5 for the third, the fourth. So we can expect a bit of a pullback or a bit of a dance in the 173 to 170 sort of area here, based on this wave 4 and this wave 4. And then we should see a move to 180 and then a corrective move at that point, and then a little wave 5 here, which we should put in over here for this wave 5, and then a wave 4 here. So we can quite easily end up at 200 up here, which is the next major level at that point. So yeah, basically with Apple, stay long in Apple, and you could buy the dip here, as the young bloods would say. So that's all looking quite positive for Apple. And also Amazon as well. As you may recall, I was looking for this to be a low here. But we only had, last time we spoke, we only had 3 waves to the upside. So we were looking for 5 waves to the upside. We don't have 5 waves yet because this hasn't been breached here, but because this hasn't taken out this top here, but because it's nipped out this top and this top here, that means we can look at this being bullish corrective. So that means in due course, this top will be taken out. So we talked about being long here and here, just keep the stop under here for a little while. And it's also climbing on this, in this particular case, from 100 to 10, which is the first minor level, and these are sub levels here with the Fibonacci numbers 1, 2, 3, 5, and 8. So we're on the midpoint, the 5, the second strongest number. So now we've got it, we're testing it as support. You know, it's been here for a while. You know, it was support here that failed, and now it's checking it again. So it's in quite a strong sort of position. So yeah, I mean, we could count this differently as 1 and 2 and 1 and 2 and those sort of things. But I do believe once we get into group 2 here, which is 106.50, 72, 107.20, it's actually 22 and a half, that's 72 there, almost a prime number of 73. The well, a lot of folks like that prime number at 73, don't they? So the 72 really is 72 and a half, basically. That's what it is. So it's quite close to the most liked prime number 73. So yeah, I just think it will just keep sort of building to the upside. Because we're in 1s and 2s, you have to keep the stop out of the way, that's all. And NVIDIA here. So once again, we're still within group 2 here. So I'm not sure how to count this here. I mean, I could count wave 1 in 3 waves and have it as an, as wave 1 still. That means wave 3 will be in 3 waves, and wave 5 will be in 3 waves as well. So I'll just see how the cookie crumbles. But, the normal thing is going to apply here. We're going to see, something like this, play out. here before heading higher. At that point, we're going to see a dance across here. So if you're trading up here, you want to get to the 3 and just get out, and we'll just need to be a bit patient and wait. But all this consolidation here within group 2 is going to offer that nice support over here for support for a wave 4 at this point. So longer term traders, you could probably hold through this number really, but otherwise, yeah, we'll just see how this goes. I mean, I can't go 1 and 2 and 3 and 4 here. I can go 1 and 2 and 1 and 2. That might be the next best bet, but we'll see. But anyway, we'll be at 300, and you can expect corrections across there. Meta here, Facebook Meta. Yeah, there's a couple of ways to count this here. I can also count this with wave 3 being in place here. So we've been looking, we've called in the top and we're looking for a little correction to occur, and that's playing out. But the trend to the ups, you see this market is trending to the upside, and obviously the market was a little bit shy coming into the $2.50, which is the medium level. And as I've always mentioned, we would see some type of sort of classic trading levels pattern across this level. So I still believe that will be the case before pushing up into 300 up here for this. So I'm not sure what we had these on. I'll just go to 1,000 ticks and just see. Okay, this is where we were last time. So yeah, look, from this wave 4, I can, count it being completed up there, but I wasn't quite sure on how big the correction was going to be here. So we just wanted to wait for it. So it could push up from here. It could just have one more little push down from here and then push up as the market's pushing up. So it's likely to push up, but I think there could be one more little move down here just by looking at that. Just check. This is 100 ticks. It's a little bit. I mean, even if I looked at this as, I didn't know how. I mean, you've got overlapping wave structures here, but I suppose I could look at that as 1, 2, 3, 4, 5 and finish at that point. Look, you could probably go long above that, but I don't really have 5 waves up here just yet. And if you got 5 waves, you'd probably end up coming back here and then pushing up. But you just got to be careful. You can get one more move down here first as well for this. So I'm not quite sure how to count this just yet, but we should be pushing up here in line with the general markets. Another probably safe way to do this would be that if we take this and this here, so what you can look for, just try to treat this level here as a trading level, and what will happen is it will push up and then it'll come back and sit on it. Now, it will probably come back in 3 waves. It might just be fast, but so you might be able to look at doing it that way, That would be a safer way because then then you've got your risk here, you can manage that a little bit better at that point. So it's one way forward anyway, but you probably need to get out up here on this, depending on obviously what you do. I mean, everybody's a little bit different, how long they hold things and so on. So Netflix is a bit of a TV drama itself at the moment because, we counted this here up as 5 waves here, 1, 2, 3, 4, 5. So after a correction coming back into the 50-60%, we should see another move to, the upside. And there's different ways to look at this. I could put this here as an A wave, a B wave, and a C wave, which I liked. And then I couldn't really look at that as 1, 2, 3, 4, 5 here, but I might just sort of have to do that. But yeah, I mean, this is the trouble when using a market maker platform, be it any CFD provider. You have to understand that they make their own market, so they will be making their market, which will create a different price, to the actual price, even though they should be they generally mirror the actual market itself to the best that they can. But because people are buying and selling on their platform, they're making a market, they have to create their own price, which is good and bad. But anyway, we're not really pushing up here just yet, are we? So, we do have this little first 5 waves here, there's issues with that. but we've got this 3-wave move here. I mean, I think we probably talked about going long, but I probably would have done here. But if you haven't, you could probably go long above here. I wouldn't really overdo it. We can stack it up at this point up here at the 330, you know, looking for a classic trading levels pattern like this here, waiting for that first high above the level, and then the second high. You know, it's a process, top-down approach. But yeah, just need some confirmation, because if I took wave B from here, then we'd have 1 and 2 and 3 and 4 maybe here, and 5, and one more low. If you don't have leverage, then you might want to hold on for one more low into 310. Probably wouldn't even go that low. Would probably be 313 or something, if that. Yeah. So Enphase here. As you know, some of this count was pretty easy. We're looking at this B wave up here. Obviously, we've got a third wave here. I mean, it's pretty strong and powerful. And then, you know, from wave 4, we should be looking for 5 waves down here. So the first leg here in 5 waves is easy peasy. And then we get this corrective move here with a spike in it. So how do we count that? You know, do we count it as wave 1 here with an A, B, C for wave 2 here, and then down to 3? And then for 4, we're overlapping here now. You know, do we look at this ending in 3 waves? But we do have 5 waves here. So it is a bit of an issue, but I'm thinking it might shoot up with the other markets. So it's quite possible we can put this wave 5 in here. I mean, the other thing too really is that, you know, the size of wave, I mean, wave 3 is big. Wave 1, you know, this wave 5, it's pretty big compared to wave 1 with the extension in wave 3. I know it's been a bit dramatic with that drop, but yeah, I mean, the rest of the market should push up. So I'm thinking if you wanted to go long here, then a very small position here, part position here, and then we can build in on top of this trend line as well. So that maneuver that we just did with Facebook, like looking for the first high above these levels here, would be the go at that point. So it'd be a bit like if we did the same thing here, we would look to wait for that first high above this thing level here, and then we'll go long from that point. We could probably drop it down to the second high in here, that type of thing. So that's just another, you know, many roads to Rome. So I mean, just sort of do your thing. But if this does appear to be 5 waves here, so we'd have to leave the stop here. But buying on the low here is always an issue, and you could very well get trapped into another deeper move here. But the rest of the market moving up. So yeah, you know, nickel and lithium, and that should be turning. We should see a weaker US dollar. Where are we here for a moment? Let me just this is Piedmont here. This is a lithium play here on the NASDAQ. I've got it here as an A and a B over here, and looking for a C wave down here. It's also possible to have this over here and look at this here as 1 and 2, 3, 4, 5 here, then an A, B. So 1 and 2 and 1 and 2 here. It's possible to do that as long as that low stays in place, and then we'd have a strong move up here. So yeah, that's lithium at the moment. I've got a position in this market. You know, and I won't be shaken out of it. I don't have leverage. So if it does drop here, I'll just be picking up more, because I understand that this is corrective here, this particular pattern. And this would be, it reminds me of Apple, actually. I mean, obviously, there's I'm just talking patterns. You know, the beginning when Apple had its stop, you know, there was many markets that that came down that are corrective, you know. Over here, we've got the Chinese lithium companies, and these are much bigger than Piedmont. These are Piedmont's about 30 billion, these are 150 billion. So the thing here though is that we can see that we've got we've got an A wave here, some sort of B wave here, and a C wave here. Now I'm not quite sure how to count this. It's also a little bit rough and ready, and there's a few, it's not a beautiful picture in terms of an ABC, but it is in the way that we've got 3 waves down here. So I'm thinking we're quite close to a low in lithium. And if that's the case, then that demand for lithium would reflect back into the industry, be it, you know, solar panels, or be it inverters, you know, and all those sort of things. They're in the same ocean, aren't they? Just they've all got different, they're all bobbing along in different waves. But so there could be that low there. And the other thing here, of course, is that, you know, we're thinking that, you know, the whole move up here can just be corrective. So that's another thing that we'd have to eliminate along the way. It's quite possible that we could put wave C here and have a low in here, but we were expecting it to come down further. So anyway, this is just for fun. It's possibly, you know, a low in here, and we could end up here somewhere. You just have to keep a bit of an eye on the whole pattern. But yeah, if you wanted to get in at the bottom, that could be a bottom, but it also, you know, the money's in the turn, but so is the risk, obviously. Okay, so Google's been one of the sort of weaker markets around the world because it just hasn't really gotten off its lows. You know, you have to remember a lot of other markets are testing highs up here, like Apple, you know, and yeah, some, yeah, different markets are in different places. So this is a bearish count here. Now, there's 2 bearish counts tied up in this particular. I've got bullish counts too, but this will suffice for the moment. So we can look at this in 2 ways. We could look at this as a 3-wave move to here as an A wave, and then a B wave here, and then 1, 2, 3, 4, 5 waves here for the C wave of B here, and that would be it, and we're coming down from here. But the problem with that is that we can see that for the short term at least, we've got the general market moving to the upside. So it's likely that these 5 waves here will be in the bearish pattern, would be an A wave here, a B wave here or here, and then a C wave coming in over here. So we're looking for another move to the upside here that can bring us in as wave, you know, it'll be a WXY if it's in 3 waves here, 3 waves here, 3 waves here. So it can be like that as well. So I'm thinking if it's going to push up here, then we really need to be, you know, we need to be on it really as a trader. So it makes it a little bit difficult, this particular spike here, by the way. It hasn't been easy here for this. So we need to be a little bit careful. I mean, I could say just go along now, but I don't want to do that because it could just drop here in this B wave and there. It would be against the general trend of the market, and it should just push up from here. That's what I'm thinking. So we need to have a look at this. I don't know if we're on 1,000 or... So we've got to find a way in. If we look at this here, the 5 waves here, which are pretty straightforward, and we can look at this as an ABC pattern here. We could also, I mean, when you look at this little move up here and back in here, we could look at that as a B wave and a C wave coming down here. So the B wave over here for that, you know. But, and that's possible, but if we push up a little bit further here, then we'll have to look at this being a little, you know, being a bit bullish. We have to try to find a way in here on the long side if that's going to be the case, you know. So that's on where are we? 1,000 ticks, 100 ticks is next. So this is kind of not a bullish count, but from wave B here, looking at this as 1 and 2 and 1 ABC for 2 here. Obviously, if that top got breached, that would force that to be corrective. We could look at this here. We'd also look at this as 1 and 2 in here, by the way, as well. We'd look at that as 1. I might need to lift it up a degree of structure, but that's okay for the time being. So really, just thinking about this. So I'd like to get in sooner rather than later. I mean, technically, taking out this top here would be the, you know, would be the safe trade at that particular point. I mean, the other safe trade really would have been, woulda, coulda, shoulda, little classic trading levels pattern here, would have been the entry here and the stop under here for that. But I think this is going to lift up here. That's going to give us 1, 2, 3, 4, 5 up here, and then we're going to pull back here, and that will be 1, 2, 3, 4, 5, and then we'll have this one. So this will be up here. Let's just get rid of that for a moment. And from this low here, that will be 1, 2, and then 1, 2, 3, 4, 5 for the third, fourth, and fifth. So really, that we should get a pullback at that point, and then a push up there. So if I looked at this as down for wave 1 for a moment, let's just look at the flip side here as down for wave 1 here, then we could put this as wave 2 over here. We could go an A and a B, and then 1, 2, 3, 4, 5 over here. So really the safe trade over here would be this one here coming up above that B wave here. You with me? So yeah, so I can't really confirm anything until I get over here. But if you wanted to go here, then you just need to leave the stop at this point still under here for this, just in case we've got an overlap. You could get away with it just here. If you took that top out, you could put the stop under here. But you'll need to be careful of this. Once we get 5 waves here, this can pull back 50-60% here. So we need to keep the stop under number 5 until group 2, the lower end of group 2, the 106.50 becomes the tested support. Once that becomes the tested support, then we can lift the stop from under this level up under the 106 at that point somewhere. But that's the little journey at that point. That's the safe trade. This is where you could just get in on the open here if you wanted to, but you have to keep the stop here. So I'll just leave that at the moment, but I just colored this red, so at least I know I've talked about it at that point, and if you want to go in, then you can go in at that point. But there's risk at that. So maybe you know, a quarter, third here, and then add a full trade over at this point. So it should move up with the market. So with Microsoft here, it's making a new high here, so we can look at this as wave 1 and 2, then 1, 2, 3, 4, and 5 for the third wave. AB, well, probably some other WXY here for 4. We've got little 5 waves here. A bit small here, so a bit curious about that. We do have a nice ABC pattern here for this, so that's all good at this point. That's taking out this high here. This is the same situation as we just talked about with Google here as well. So this will continue to push up here. That will be I wonder if I can just go 1, 2, 3, 4, 5. No, still push up. Look, there might be, the normal thing would be this, so just be a little bit careful about that. I'll take this off. Let me just think about that a bit. I mean, this would be the normal thing to happen at number 10 here, or number 1, really. So we'd have to look at this as 1 and 2. This would be 1, 2. Could look at that as 3, 4, 5. Yeah, it could play out like this. I think the thing here is that if you're going to go long, you have to leave the stop under here. So I'll just put that there, and we'll just keep a bit of an eye on the stop, and you can, if if this is your stock, you like this, then you'll need, probably that would go there and there at this point. So that's where the stop would go at least. I'm just going to remove this, and I'm going to remove these because they'll just squash up when I close the program. But it looks like it wants to push higher. This for Berkshire Hathaway here, this move here is in 3 waves. So that means that the safe trade to go long would be above that top. If you wanted to get in earlier, then you'd still need to leave the stop under here for this. So I'll just paint that red as well at this point. So you could do a full trade there because that would get you to above that high here. And this one here, if you put this here, this would give you, we'll just give a part trade here. So we'll just make that a thinner line. that point. So it could be 25%, 50%, 30%. But that's where the stop would need to go at this point. Well, really, let's just keep it under here. Don't want to get chomped out. It's not a lot in this, I guess, you know. Like when the NASDAQ here, just generally speaking, with 1 and 2 here, and then we go up for 3 up here, then 4 here, then 5 up here. So wave 1 took, you know, 1, 2, 3 days. This could take 3 days, and the other one could take 3 days, and wave 4 could take 3 days, you know. So that's kind of where we're looking at this point. So maybe you get to the 340 or something, you know. I'm going to take these off here now because it just won't have a lot. It's not like a it's not the beginning of a trend, you know. We're trading wave 5 here, so it's going to be, you know, I mean, it could be the length of wave 1, really. Could just take the top out here at 34 and be done, you know what I mean? And then we've got to, I know that at 3:30, the top of group 1 here, we've got the arrival, the reaction, the first high above the level, then the ABC correction. This is where we could top out here with wave C here at the 78.6 mark here, with wave B here. That could be the top of the market at that point. We can't confirm that we're in a more of a bullish market at this point, you know. This move up here could be an A, B, and C at this point. We know that you know, we know that this move here can be, you know, the A wave here, the B wave here, and the C wave here. That could be the low in here, and then we can have this up for 1 and 2 here. And realistically, we can have all of these 5 waves up here. It's too short for wave 3 at this point, even when we get up here. So we could look at it as wave 1 and 2 over at this point. But we still need to look at the whole thing too as, you know, the whole thing down as an ABC for an A wave, an ABC for the B wave, and then down for the C wave. It's possible, you know. You know, obviously, you know, we've had our earnings. They're good, and folks will get in. But once these five waves here finish, one for NASDAQ, 1, 2, 3, 4, 5 up there, then, you know, that's our next bearish turning point at that point, you know. And the earnings were pretty good, so, you know, everybody's sort of in there, and that type of thing. You know, we know that there's a banking problem. You know, there'll be, you know, I'm sure there's like oodles and oodles of other banks that are running, you know, quite close to insolvency because they're all been doing the same thing, you know. Obviously different, they have different mandates for, you know, in their whatever, but in their missions, but you know, I think there's a lot more to come yet. Anyway, we've got to be careful about the next turning point. So with the NASDAQ having 5 waves up, getting 5 waves up here would take us, this is not long enough to be a third wave to go to this wave 1 here and 2 here. It can be wave 1 and pull back for wave 2. If that is the case, then we'll be looking to trade wave 3 up once we can confirm that. But we have to move past this 1, 2, 3, 4, 5 for C or B here at this point, you know. So yeah, that's where we are at this point. And Tesla here, so we've been looking up at Tesla here as wave 1 and 2. We could also view this as wave A here and wave B here and going up for wave C. That's also possible. But in this case here, we should be, you know, because we got 5 waves here, we now got a correction, we should be getting another 5 over here. We had a few issues with this. We talked about it a little bit. We didn't really buy in on the low because we had other problems. So with this one here, you know, moving above the high here, we can go long at that point. But yeah, this is where we are at the moment with this. So I think this is probably one of the best trades out there coming up, you know. I can't remember all the others, but this would be quite good. That's good. So we talked about going long. I don't know if that was on 1000 ticks or 100 ticks. Must have been. Let me just fold these up a little bit better. So this is where we were. Yeah, so it's all good. Just going to keep this out of the way, stop for the moment. Be something like that. I would like to get up higher on that. That's length of wave 1. So we need to be clearing that, which we will be. So this wave, blue wave 3 here, needs to be longer than this. I mean, technically speaking, using Elliott, we can go the length of wave 1 here down to here, roughly speaking, and then we can just get rid of this now, grab that and put that on wave 2 here. That can give us the length of wave 3. So we may get, we'll see. This, it could be longer too, It could get us to the 180. That would be nice, but we'll see how that plays out. One, two, could be it there. I can extend it up if need be. We'll just take the conservative view first. That might be 1, 2, 3, 4, 5. Hopefully we'll get that up a bit higher. This wave, they can come back to this wave 4, which is about right. So I just want to keep this out of the way. You can probably bring this up a little bit further. Should be all right. Okay, so up and away. I'm not doing anything with block until I get the bank sorted out, so I'm not going to worry about that. So the situation here, this 5 waves up here didn't take out the top here, so it's quite probable that we move up at this point for 3, 4, and 5. Kind of, you can line that up with the NASDAQ in that regard as well. Those waves we're looking for up there. So that could be the top of that market here. Now, the interesting thing here is that now that this move here is bouncing off where it should be, moving up here a bit, then what we can do is that will leave this exposed here. That could be, I'm not going to go long into this here. You can go long if you want. I'm just sort of looking for more skeletons to fall out the closet and all those sorts of things. There'll be more in the banking sector, but that will leave this here. I'm not going to put that there yet. I'm just going to keep it under here. I mean, the stochastics is pulling back. It looks good. I'll see how it sort of plays out, but we wouldn't want to miss that as a short trade. I can assure you of that if that was going to be the case. So I'm just going to leave it under here for the time being. And then we can come over to BAC here. With BAC, there's a couple of ways to look at this. So we can look at this in terms of all the way down here for the A wave and ABC for the B wave. And we can go 1, 2 here and 3 down here and 4 here, and then have this as wave 5 here. So an ABC here for wave 4 and then come down for wave 5. We'd need to make a new low below here, which we're going to anyway because this move here is in 3 waves to the upside. So it's confirmed now this has dropped below this low. It's confirmed that this is a corrective pattern. So at some point in the future, we'll be taking out this low here. Now, we can look at this here as wave 4 here, and that can take us down to wave 5 down here. So that's one way to look at it. We have to understand that just using the NASDAQ again as a bit of a template, we have to understand that 1, 2, 3, 4, 5, when that finishes up there, next week or whenever, depending how quickly things move, then that will be a particular top, and it can be a turning point for the bear market. So that means that this here could do two things. We can look at this here as an ABC for the A wave, a B wave here, and then a C wave up here, coming back up here for wave 2 or wave 4 at this point. We can also look at this here as a wave 2 sitting here because it's in 3 waves. Now it's confirmed that that's there. So it's going to be sort of interesting. I'm not ready to short this, but the more that I see that this has a rally here, because the markets are generally going to rally, if we can see that we get a rally here, what it's going to do is it's going to leave this open, this low open, as a possible short trade, and we may be able to improve on that as well, because you know, all of this down here can just be wave 1 and back for wave 2 and then down for wave 3. So there is a short trade setting up here. I just got to wrap my brain around it a little bit, and look, this could come back up to here. It could just come back up to the 61.8% area and all of that. So yeah, the timing of this to get this short trade here will be good. So anyway, I'm thinking about it, and because obviously we want to short the weakest markets, you know. So this will be one of them here. So Johnson & Johnson, there's a couple of things that can play out here. It has, on the bullish side, it does have a nice A wave, B wave and C wave down here. Now, obviously, this can, you know, just double in size. That means that we can put wave C over here. We can put wave A here. We can put, this is the 61.8%. This is the 78.6. We know that the general market is looking for 5 waves up here, and then it's got a possible turning point at that point, you know, looking at the NASDAQ. I mean, this is not a NASDAQ stock, and this goes into the low volatility stocks, and it actually got a better bullish count than bearish count, but markets can do this here with an A and a B and a C wave here. Complex, simple, complex. So yeah, we just need to be careful with all markets in this next 5 waves up here. Now, if that's the case, anyway, I just wanted to explain that point to it. It does count quite nicely. I mean, I do like it as a C. I mean, I like this as an ABC pattern, and it could certainly move up from this point. Now, I was looking at this in 2 different ways. One was that we had an ABC here for wave 2, and then it wasn't really giving me 5 waves here, but if we don't make a new low here and the markets are going to push up, well, then we could just push up from here, do you know? We've already got a little long trade in here somewhere, part position. We may not come back down here. We may need to look at this as some sort of 1 ABC for 2. I don't know. It's pretty butt ugly, I have to say. But it did push up over the last couple of sessions, and we're expecting the markets to push higher. So it will probably be lifted higher as well. So we'll just see how that plays out. But yeah, taking the top out here creates a long trade. How far it gets us is another question with all of this, you know. Like I said, the 61.8% is here and the 78 is here. The other, you know, the flip side to this is that on the more bullish side, we can put wave 3 up here. So to catch it here, you know, because we've got to kind of take a balanced view on the situation, you know. We can't eliminate the bearish pattern just yet, and we need to go to the next level. So that's what I've explained with the NASDAQ. So that will be, you know, this will be a weak point here. We looked at, you know, this is a low volatility stock, you know, same as the Berkshire Hathaway, and we're looking for 5 waves up on that as well. So we're looking for 5 waves here that can make this, you know, an A wave here, and a B wave here, and a C wave coming in here somewhere, you know. And then rolling over from that point. So going long here kind of puts this at, you know, as a risk with this. So what do we do with that, you know, because it could be wave 3 as well. That's the problem. So obviously we need to have some intestinal fortitude, and we need to sort of go with it, but with some common sense as well. So what we could do is we can just, if we do if it does move to the upside here, all we need to do is count 5 waves and get out, and then wait for it to pull back. And after those 5 waves and pulling back, if we can see the pullback as being corrective, then we'll just get back in again and continue our journey at that point. So that's about one way to handle it anyway, rather than sort of staying in there and you know, crossing your fingers type of thing. So, but anyway, let's just see how this climbs up through here. We've got a little part position in here. There can be another little drop here first, but because the markets are lifting up, we'll probably lift up. So we probably won't do a full trade here either. We'll just end up doing, because we've got a part position in there, we'll just add to that part position, and that part position up here will bring down to here, and we may even get it in here further again as well. So there's a few things to go on here just yet, so we don't need to do too much at this point. We'll just observe that. And that's that. That's the sterling. So thanks for tuning in. Cheers.